Today was a big day at Jackson Hole, and in this video, we're going to talk about real estate, especially how prices are tanking in certain parts of the country, including, Palm Springs. And you don't even want to know what's happening in the Palisades. It's bad, but it could be an opportunity. But I want to append this video by telling you that, yes, today was Jackson Hole. We basically set up for a 25 basis point cut. Muslim, who is another member of the Fed, just seconds ago said that, quote, Fed policy is modestly restrictive, and there are labor market risks, but they haven't shown up yet. So it's like materialized or haven't been realized yet is what they're saying. And so the next rate cut could actually be followed by a pause. This is kind of a way of them setting up, maybe we'll get 25 in September, but unless the labor market worsens, we might go 25, one and done, which, has been a possibility, of course. And then Muslim suggests that the jobs report may or may not, coming up here, be enough to justify a rate cut. So this was part of my expectations, especially with course members and the Alpha report. We had an exact game plan of, hey, we think the week's going to be down between Monday to Thursday. We think Friday could boom, but even if we boom, we really only boom up to September 5th because September 5th is the jobs report, right? And if you want to be part of that Alpha report, remember, we do have a coupon code JHOLE expiring today. Just quick reminder. All 8 courses, live streams, every day the market is open. You get the Alpha report, the fundamental analysis, my 10 stocks to buy for the next 10 years list. We're on number 1, okay? So we do the fundamental analysis together and then we make a buy. Very simple. So if you want to be part of that, along with, you could potentially write the course off, the property management courses, you get the sales courses, the tax benefit courses, all of it, meetkevin.com. It's really simple. You pay once, you're in for life. Otherwise, the price will just go up again. And with all this inflation, well, what can you say? Why Warren Buffett is going nuts for real estate right now, increasing his exposure to D.R. Horton, Lennar, increasing his exposure to pool, betting on a refinance boom. Here's Glenn Kalman, the CEO of Redfin, now owned by Rocket Mortgage. Glenn's right. Balanced market, except, the overbuilt areas. He said it himself, Texas and Florida, and some of the Sunbelt states.
And this year that may happen next year, sooner or later, rates are going to come down a little bit. But
that's
already
the bet
we're
they're
seeing
making.
a meaningful improvement in the housing market. And I think I've been on this show every month for the past 5-10 years. This is the best news we've had in 2 or 3 years. The market is getting a little bit better. It could be more, but we'll take it.
This is what Buffett is seeing. Buffett's POV, basically, and in my opinion, why his 13F filings show this increased exposure to real estate is once tariff inflation settles down, interest rates come down, recession or not. If you have a recession, rates plummet, rates come down. You get a refinancing boom, people build pools, people renovate, people spend, the housing market goes from, in some markets, many markets, balanced to potentially boom again. The risk factor you have is the overbuilt areas.
Just as more natural disasters hit the state of Florida, the cost of owning a home now has 3 factors. It's not just the rate and the home price. It's also how much you're paying for insurance. And that is making people there really hesitant about buying a home, and it's softening the market just a little bit.
Yeah.
Okay,
it's more than that.
Thank you for joining us. Always good to get your
insurance costs have been skyrocketing in Florida. Part of, not just because of hurricanes, but also, look at what's happened to the condo market in Florida. When you had the building collapse in South Florida, HOA and insurance costs have skyrocketed because some of these are just 1970s, 60s apartment buildings, and their foundations are just not up to snuff with today's standards. It's a really big issue. So Redfin CEO here got on the show, started by talking about how we had a lot of inventory pile up over the summer. And while inventory growth is still present, that growth is slowing. So we're still seeing more inventory, but it's growing at a slower pace. Let's go ahead and take a look at what we have. So we're going to go look nationwide. Median sales prices are up in 2025, up about 2%. I like using weeks supply. You could see weeks supply of inventory is at the highest level of the last 3 years, which actually gives you choice when it comes to buying, which is great. Median days on the market also above all of the individual areas. Now, if you go to areas that, we've got experience in, like places like Dallas or Florida, we don't buy in. You've seen an overbuild to where the median sales price in Dallas, for example, is actually the lowest of the last 4 years, down 3% year over year here. If you jump into Tampa, Florida, as another example, you're a little bit more mid-range here, so somewhat flat growth over here. Let's go to Austin, Texas, where we build a lot. Something to know, yeah, you're at the lower end here. Something to know that's very different about buying in Austin is you generally have to evaluate, does it make sense to just basically take the building to the studs and rebuild it when you have a fixer-upper, versus does it make sense to renovate? That's a kind of question that you typically don't have to make in areas like what you get in California. In California, there's generally no question of like, oh, are we going to rebuild or are we going to renovate? The answer is always renovate. And so what you could see is, even though you've got a little bit of a relaxation here in June, you could see median sales prices are still higher than all of the previous 3 years in Los Angeles. If you type in San Diego, for example, you see the home prices are the highest they've been in the last, 3-4 years here. So it's exactly the opposite of Texas and Florida. It's the same thing that's happening over and over again. Now, totally reasonable, because California has a massive lack of supply and limited property taxes and limited opportunities to build. We're actually with House Hack building some ADUs. I'll have to make a video on it. But Lowe's made a really good point the other day in their earnings call, which I think is worth considering if you're looking at the housing market. Lowe's was talking about this, let's see here. They said, here, I've got it right here so you could actually see it. At the same time, we estimate we need 18 million new homes by 2033. Together, these trends point to a healthy pipeline of demand for home improvement and new construction ahead. That might be what Warren Buffett is seeing as well, is that new construction margins get to stay high if we constantly have a housing shortage. This is why House Hack is also developing. So we're developing homes for people to live in and fixing up properties that people can't live in. So we think we're providing a really good service by adding rental inventory to markets at a time where it's really hard for people to buy homes. But what you'll notice is we only add about 1.6 million homes per month in America. And by 2033, Lowe's estimates that we need 18 million more homes. That leaves you with a shortage of 5.2 million homes as a shortage by 2033, which means housing prices are unfortunately likely to continue to get more unaffordable, especially in areas where people want to live where it's hard to build. Unfortunately, in California, it's hard to build, but that just squeezes prices up. As usual, the Democratic policies just give you a hedge for your real estate investment, and values go up because they are too incompetent to realize that we need simpler building regulations and we need to make it easier to build. When you go to Texas, ironically, that's where you see home prices fall, and in Florida, because it is easier to build. So you're able to add the supply the market is looking for. Lowe's, though, here also cites $50 billion of deferred home improvement project demand due to high home equity, but high interest rates. This creates some really interesting opportunities for the home financing sector, which House Hack's also looking at, though it's really low on our priority list right now. Priorities right now are wedge deals, developing accessory dwelling units or even homes, and then of course our artificial intelligence play. You could learn more obviously about House Hack over at househack.com, but quick note, we've had just in the last 48 hours some additional breakthroughs in the AI that we plan to start licensing hopefully within the next few months, to where we're thinking about getting on-prem like H100s or Blackwells. So we're pretty excited. Like we can't wait to show you what's coming for House Hack. Keep in mind, if you wanted to invest in HouseHack, you could do so. It's open to non-accredited investors. You could go to househack.com, read the solicitation paperwork there. The video can't be a solicitation. But you get a 5% yield, so it's kind of like having money market, while at the same time getting 100% of the upside in the stock. The earliest conversion on that is 2027, and then you get all the upside in the stock. And the only way you can convert is if the valuation of the company continues to rise, which is very exciting. So we're stoked about that. I think we're in a great place, and it's a great time. And so this is why I'm so excited, because I feel like we've been building this company and these plans for 3 years, and started buying in 23. You know, we've got a lot of plans presently as well, and growing our asset base. But when you combine this with what Buffett's doing, with what Lowe's is saying, with what you're seeing from the CEO of Redfin, where they're saying, hey, we're seeing a slowdown of inventory growth and a balanced market, to me, he's kind of right. This is the first time that he's enthusiastic going on CNBC saying, hey, you know, a little bit of a pairing of interest rates could be a really great thing for our housing market, which is great. See, there's this reference by Lowe's of this housing lock-in, the pressured consumer. And that housing lock-in expires as rates come down, right? And so there are obviously big opportunities in mortgage companies as well, you know, once we actually start getting to the refinancing world. So very, very exciting. So let's see here. Some of y'all in the chat say Texas over Florida. Somebody says no property taxes coming to Texas over Florida. Well, both of those areas have much higher property taxes than California, that's for sure. But that's because you don't have a state income tax. So let's see here. Isn't higher credit fee now a big block to buy new homes? Higher credit fees. You mean financing fees? You know, I haven't seen that as a big issue or roadblock. I think what you mean are the higher interest rate costs, because a lot of the higher interest rate costs are sort of your loan fees are actually being subsidized by builders right now, because builder margins are so high, they can afford to buy down your interest rate and upgrade your flooring and your countertops and everything, whatever, just to get you to buy it. And they still make a pretty penny on the build because home prices have just come up so high, which is really, you know, exciting. So let's see here. Let's see here. Any thoughts about the West Palm Beach area? Mar-a-Lago. Nobody knows Mar-a-Lago and West Palm Beach better than I do. So yeah, like obviously, you know, there are a lot of concerns that people have about just the general affordability of housing. And that's the problem. And I have to say, this is where, you know, when we look at housing data and we see what's happening in the housing market, we are of the mindset that unfortunately over time, the housing market is going to continue to get more and more unaffordable for people, which is bad because it's going to leave people behind. This is why I'm such an advocate of don't be a renter, own where you live, never sell it, keep it, and keep growing. Because if you're not on the ride of owning real estate, it's going to get increasingly more difficult to get on the ride. And that's really what it is. It's a ride. You know, we've got new lectures, by the way, coming out in the do-it-yourself property management and rental renovations course. Because, you know, designs for real estate change over time. For example, you know, black bronze hardware was really in for a period of time, or millennial gray flooring was really in for a period of time. Gray kitchen cabinets were in for a period of time. All three of those are no longer in. And these design trends and making sure that when you're renovating real estate, you're doing so in a way that's going to be neutral for the long term and valuable for the long term is critical. Obviously, you know, we've got a Meet Kevin membership coupon code expiration tomorrow for Jackson Hole. You get all the 8 courses and all the updates. So if I add lectures, you know, when I do to the Trumponomics course on tax benefits, mind you, you could probably write off this course as well, talk to your CPA, or I add lectures to the property management course, it doesn't cost you any extra. You get that. You get the Alpha Report. You see the insights on what HouseHack is doing and more. It's pretty exciting. So overall, I'd say if I have to look at the real estate market right now, there's probably an opportunity to take advantage of where rates still are right now being high, because once they start coming down, you might end up inducing a little bit of a boom in real estate again, which could be good because it could actually be supportive of GDP. If tariffs really start hitting consumers more and the consumer side of the equation slows down for GDP, hopefully real estate investment growth can actually keep GDP up and keep the markets going. So we'll see. So, yeah. Angry German accent, please. Nein! Kein Deutsch für dich! Anyway, all right, so that gives you a little bit of real estate update. I'll see if there's any, sometimes the Redfin data, sometimes they have a news section you could look at as well. Remember, Redfin was just acquired by Rocket Mortgage, and Mr. Cooper gets acquired by them as well. Also interesting, look at this. This is a very interesting one. Home purchases getting canceled at record rates, probably because of where rates sit right now. 15% of homes fell through last month, highest July record on rate. This is actually great if you're a buyer because it means there's so much stress out there with other buyers. If you're actually a legitimate buyer and you can make it, you can get better deals, because other people are flaking out. Look at this, not a surprise. Cancellations are most common in Texas and Florida. No surprise. HouseHack has zero exposure to homes in Texas or Florida. We actually heavily investigated real estate in 2023 in Texas or Florida, and what we observed was a market that was turning. So to me, it wasn't like some prediction that came true. We saw it happening, and it was just a matter of time before everybody else would start talking about Texas or Florida problems. Now everybody's talking about problems in Texas or Florida. Well, now people are going to miss the boat, in my opinion, on getting into the dip. That's my take. But this is based on Redfin's analysis of pending home sales data. The data is seasonal, which is why we compare, blah, blah, blah. Higher home prices, higher rates, economic uncertainty. Home purchasers are more likely to fall through in Texas and Florida. San Antonio, 730 purchase agreements canceled in July, equal to 22% of the market. I was just in San Antonio, by the way. And, actually, I went to Dallas, then I went to Austin, then I went to San Antonio. Shout out, by the way, to the course member that met me at the Alamo. That was really cool. But I have problems when I have like childhood memories of a place. So I have a little haul here. I got Remember the Alamo, a puzzle I'll be doing with the kids. But yeah, I was in San Antonio. San Antonio is great. I got this big Remember the Alamo comfy looking blanket. Let's open it up. So I don't know how a real estate topic is all of a sudden turning into merchandise haul, but it's because we're talking about San Antonio. Has anybody ever been to Schlitterbahn? San Antonio also has Schlitterbahn, which is apparently now owned by Six Flags. San Antonio was a very German merchant town, even during the times of the Alamo. That might be upside down. I don't know if it is. But anyway, nice big, oh yeah, it's upside down. Alamo blanket over here. So, big fan of Remember the Alamo. 2 Germans died there. And then I even got, in classic Texas style, chocolate ammunition. Because, why not? Standard issue. Yeah. I got a bunch of mugs too. But I don't want to unwrap all these mugs. Because that's just what I do when I go places. I just buy mugs. But anyway, San Antonio, equal to 22.7% of homes that went under contract last month, the highest percentage among metros that Redfin analyzed. So it's so interesting. My dad took me to San Antonio when I was 7 years old. We drove from South Florida, because I grew up in South Florida. You might not know that. I grew up in South Florida. We drove from South Florida, Fort Lauderdale. Dude, I grew up in South Florida, in the Fort Lauderdale area. Weston, Davie, Aventura, all those areas. Bounced around Plantation. We drove from there to Texas. It took like 20-something hours. It was insane. And we were setting up for a trade show. So we had to bring kitchen stuff or whatever when I was 7.5 years old. And we went to the Alamo. And I'm like, Dad, it's my turn to take you back to San Antonio. So anyway, Redfin analyzed. So wow, next came Fort Lauderdale, Florida, 21%. Then Jacksonville, then Atlanta, then Tampa. Wow. All that area. Home prices were least likely to fall through. And wow, look at that. You've got Seattle on the list. New York, Pennsylvania. So like Northeast over here. Wow. Biggest drops in cancellations. Sacramento, Philly, Phoenix. Phoenix, another one. Orlando, actually. One of the problems with Orlando is you had this big like Airbnb boom. And I actually don't know that the Airbnb bust is over yet. You have a lot of people who really got heavy into Airbnbs, and you look at markets like Palm Springs. I mean, people are trying to dump homes in Palm Springs and a lot of these Airbnb markets. Palm Springs, California. Let's just go take a look at what's for sale over there. I mean, yeah, look at this. This is Palm Springs. This is an insane amount of inventory over here. $30,000 price cut over here. 132 days on the market. $125,000. Dude, who cuts the price 100 a foreclosure? What? Dude, these are the bubble markets. You got to be careful of the Airbnb markets too. Foreclosure. Who cuts the price $125,000 on an $825,000 project? Holy smokes. What do they owe for them to be a foreclosure now? Let's look at the history of this. So they bought the property in 2022 during the bubble, the Airbnb bubble. Real estate, you should know this. It's really market dependent. This is what we also say when we're studying and expanding our AI service for, which we're going to be licensing first to course members who are in the alpha report. They're going to get the first dibs at the beta, which will be really cool. But, real estate is really local. You have to know which street matters and which market is doing what. An Airbnb market, things could look like a deal, but if prices are falling, you have to be really cautious. So here are folks who bought for $950,000. They probably spent a buttload of money renovating. Then they tried selling it in 2023 for $1.1 million. Couldn't sell it. Down to $999, now down to $824, under what they paid for it. So they're at 825 divided by 1.1 million. 825 divided by 11 million is a 25% price cut. That's an example of a bubble that's burst. It's very different from, everyday real estate in high quality areas of California. But Palm Springs is definitely a market that you got to be careful of. This is why Orlando's been another one of those. And you could see, it looks like they plowed money into this. These are expensive cabinets. That backsplash costs a fortune. Sparkly white countertops, not a big deal. Concrete floor like this, very expensive. Honestly, you're probably going to get to a point where you could start at some point buying the dip on these. I don't know though, because it's such an Airbnb market. I don't know how desirable it is, but a $30,000 price cut over here. Geez, man. There's no shortage of fully remodeled homes out here. $20,000 price cut. It seems like even in the $600K range.